Hi, this is Chris with Leverage Effects, Top Gun Software. This is our Forex blog for November 21st, 2013. I like to showcase how our software works each day, and there's literally hundreds of ways to use our software and tools to find high probability trades, but I like to focus on what I consider the easiest way of trading. I'm spending pretty much all my time developing automated systems for my own accounts, and those exact same signals show up in our software as Forex signals. And I'm spending more time now getting improved accuracy for live signals versus historical ones. So this video will be a short one. I just will show a few examples, and I may not be doing the blog video every day, maybe 2-3 times a week max. Basically, this shows you what the euro is doing. Just like the Dow Jones takes 30 stocks and gives you an index of them. This takes all the euro pairs and shows you what the euro is doing visually, and you can see, it's clearly trending up. You can use fib tools. You can draw trend channels on it. Notice how that acted as the high, and once it broke through the trend channel, it kind of slowed its uptrend. Once trend channels are broken, you can more aggressively do counter trend trades. So the euro is strong, the pound is super strong, the dollar's above its hourly moving average, as you can see the gray line in the middle most of the day, and the yen is weak. So you want to buy the euro yen and pound yen. It's that simple. And these indexes work on any time frame: 1 minute, 2, 3, 5, 4, 15, 30 hourly, even daily and weekly. Bring up a euro yen chart. You're basically looking to buy pullbacks in this strong trend. Now here's a 5-minute chart. What we use primarily to trade with are range charts. This is one where each bar is 5 pips. It gets rid of all the noise, and it shows very high probability, pullback type trades. Typically after 2 to 5 bar pullback, 1 bar closing back up, you can get into a trade. So here was the first move up. If you missed it, you would go long right here. You're stopped underneath here, and that trade failed. You got another pullback right here. This trade worked. Very nice profit. And the bigger the move, the more likely you are going to need a deeper pullback. The market's just going nuts right here, so you don't want to be buying during that. But once it breaks kind of out of this area right here, you can see it trended up again. The currency index allows you to focus on the ones most apt to work. And if you are not a scalper, if you're not a short-term trader that's looking for 5 to 25 pips, you can use longer time frame bars, maybe 10 pips per bar. And it still lets you see trends and allows you to buy deeper pullbacks. You can buy the breakout of this little range right here, and you can get out right here. You got this small little pullback right here. This is a 10 pips per bar signal, and it will obviously have fewer trades and allow you to catch bigger pip moves per trade. And like I said, you can use the currency indexes. They are basically built into our back-end data feed, so you can put up the euro dollar on any time frame you want. If you want to see the hourly chart of the euro, you can, and that allows you to see, and you obviously want to go more than 6 days back for that. You can see what the euro's been doing over the last 20 days. So the euro is up near its highs over the last 20 days, or the last week and a half or so. If you put up the yen, you can see this is super weak. You can also see the highest high it was able to get to this week, or in the last few days, it was this area here, and last night it double topped right there. Very high probability. Trends down, double top on the pullback. It's a no-brainer. So, by having this up, whether you're a short-term trader or a long-term trader, you will know which currencies to be looking for trades in. You want to buy the strong currencies versus the weak, and if the weak currency is on the top, you want to sell it versus this strong. So let's put the euro up here again. Clearly the euro is much stronger. It's trending up. The yen is trending down. You draw your fibs on this last little swing right here. Notice, look where it went to, right to the 38%. Kind of went sideways, went up a little bit, started today off, and then exploded up. The yen already double topped, proved, it's an improving downtrend. Very high probability place to be looking for sells into today. Even before the day started, you're looking for sells. And that's what makes trading easy, knowing which currencies to focus on. The euro's strong, the yen's weak. If you bring up this chart, again, you can use any time frame you want. You go long right here. And it's all about risk versus reward. If trades, let's say you got in again right here, if trades are giving you 1.5, 2 times, 3 times more profit than what your risk is, you're going to probably be profitable. It's that simple. By using the currency indexes, you're avoiding buying 2 currencies that are both strong, because those will be choppy. You're avoiding selling 2 currencies that might both be weak, because that will also be choppy, and your odds of success are very, very low. That's why most traders lose money. They have no idea which currencies to be focusing on for buys, which currencies to be focusing on for sells. Plus, when they get into trades, they don't have any set risk parameters. They don't know where their exit will be, and so on. If you are looking to buy a pullback in the euro, or euro-yen in this case, if you're watching the euro chart and it's not going up, well, you might want to get out. If you buy the euro-yen, you want the euro chart to be going up, the euro or the yen index to be going down. It's that simple. Here's a chart of the pound index. And again, if you want to see the daily chart, you can hit period D. It shows you what the daily chart of it looks like. And you can see, really going back as far as the chart can see, the pound is making all-time highs. And it broke out today to the highest level probably in a year. So the pound is definitely one you want to be buying. Let's take a look at some of the other ones. The yen on the daily chart, it's near its last year's low. Let's see, Swiss, it's probably near the high. Yeah, so the Swiss is strong too. New Zealand's pretty strong. You can see over the last few months it's been trending up. It's near its high for the year. And whether you're a short-term trader, a long-term trader, scalper, you can find a time frame that fits your style using the currency index. And then, like I said, the only thing you want to focus on doing is, if the longer time frame trend support is, let's say, is up, and then with the yen it's down, look at the real-time trends. You can see the Australian is down today. We saw that the pound was up and the euro was up, and so you can buy the euro Australian. Let's go back to a 5-minute chart here just for illustrative purposes. And obviously this is trending up. This is as simple as trading can get. You have a nice little choppy sideways range. It breaks out right here. You can put your stop underneath that little swing low. And even if you got out here when it went sideways, your profit is many times bigger than your risk. All right. This doesn't go sideways long enough for me to buy it, but if you buy this little pullback right here, again, the profit is bigger than your risk. And as Van Tharp eloquently states in his trading books with his R multiples, anytime you want to focus on what is the risk versus the likely reward, or as you analyze past trades, what were you making on your winning trades on average? If you were making 1.5 times your risk on your wins versus your loss, if you're risking 10 pips and you're making 15 pips on your wins, you should be okay as a trader. And why our currency index makes sense is it allows you to focus on the ones that are most likely to trend. Then all you got to do is, wait for a little pullback. There's a couple entry patterns that I like. The market breaks out, has a little flag pattern right here. You buy. Flag, multi-hour flag pattern right here, you buy. And these risk of these trades is very small compared to the reward. Even this one here, as it exploded up, went up, went up. This is the third wave up, or maybe fourth, maybe even fifth, going back farther. the farther up it goes, usually the less pips it goes, except for those explosive breakaway days. I bet if we looked at the pound Australian, it went up even more aggressively than this one. Yeah, just straight up. There's almost no pullbacks in this. So if you see the pound super strong, the Australian super weak, really earlier in the day is the highest probability. Here you have an hour and a half sideways move, rectangle pattern, that's okay. Here's another hour and a half. You know, if it's up this much and it doesn't pull back at all, it's going to go up when it breaks out. You know, there's nobody selling this thing. So here's your risk. Here's your maximum reward. You're never going to catch every pip. But even if you got out somewhere in this area right here, you can see your reward is probably 3 times bigger than your risk. This, as Van Tharp puts it, is a 3R trade. And by focusing on the currency indexes, you know, look at the longer time frame first. If the daily and weekly trend, or even 4-hour trend for the last 2 weeks is up, and maybe you have a pullback for a day and a half, right? It's likely to resume its uptrend. And another currency is weak. Hopefully it's had a day or a day and a half going up. You know, as it starts to go back down again, you buy the strong versus the weak. And any time frame you want to look at with the currency indexes can be used. If you're a scalper, you can use 1, 2, 3, 4, 5-minute charts. And 5-minute charts can also be used for multi-hour trades as well.